Hey everyone, I'm Jeremy Szafron and this is Kitco News. And today on the show, we're confronting what may be the most urgent story in global finance, a story that mainstream media still won't cover: the collapse of the U.S. monetary system. Inflation, debt, inequality, and financial repression, all symptoms of a deeper crisis. And joining me is Lawrence Lepard, of course, a veteran investor, fierce advocate for sound money, and author of the explosive new book, The Big Print: What Happened to America and How Sound Money Will Fix It. Now, in this book, he writes, quote, "We have built our financial system on a bedrock of sand, not sound money, and it is collapsing." And today we're asking, what broke America's money? Why is it happening now? And what do we do before the next shock hits? Larry, great to have you here at Kitco News. Congratulations on the book.
Oh, thank you, Jeremy. Great to be back with you. I always enjoy our conversations. Yeah, a lot in there. I mean, the book came out in early February, and the audio version just became available. It's up on Amazon. And I went self-published because the big publishers, they want a year, and I was afraid if I didn't get the book out, everything I'm describing in the book would happen before the book was released. So
Yeah.
I'm very glad I got it released, and it does seem to be timely, right, as we can survey some of the events that are taking place. But there are a lot of things going on right now that suggest that things are happening quickly in monetary land, right?
Yeah, it certainly is. And we continue to watch these high prices on the spot gold front, too. And in
Right?
fact, most of the metals. Okay, Larry, let's start with the core idea of the book, because you write, quote, "The greatest issue of our time is the broken monetary system, which leads to enormous wealth inequality." Now, that's a powerful claim that is resonating with more and more people today. But connect the dots for us here, Larry. I mean, how does a broken monetary system drive inflation, distort markets, and then deepen social and political divides?
That's a great question. And that's really the whole thesis of the book. I mean, I wrote it because I was watching a debate where blue team and red team were yelling at each other about stuff that doesn't matter.
Mm-hmm.
And the thing that really matters is the monetary system is broken. What do I mean by that? I mean that the governments have got themselves into a trap where in order to support the system, they have to continually print more money, which then leads to inflation, which then leads to monetary debasement. And this inflation has really hurt the social fabric all around, and that's why everyone's so angry and the politics are so divisive. But as I say, they're arguing about stuff that doesn't matter. You know, if you really want to drain the swamp, we've got to return to sound money. With respect to the wealth inequality, that really occurs because the table and the playing board is tilted in the favor of those who know how to make money off inflation. Rich people who have assets and who have the ability to access cheap debt, particularly when it was at 0% or very low interest rates, they can borrow money and use it to buy assets that provide a yield, and they become richer as a result of taking that step. The average common man who's working for a salary and isn't a financial operator doesn't necessarily know how to do that, or even can't do that because their credit card borrowing rate is 25%. So
Yeah.
the system is really set up in a way that allows the rich to get richer and keeps the poor kind of permanently poor. And it's just very unfair and very sad. And that's one of my favorite, most depressing charts in the book, is that right in the beginning, I show the wealth gap and how in America today, the top 1% of Americans own 92% of the assets, and the bottom 50% of Americans own, 15% of the assets, and it's flatlined. And that 92% has been going up, year after year. So it's a very fair, broken monetary system, very unfair, broken monetary system. And sound money is the fix.
Yeah. And of course, we're starting to see people starting to get educated on sound money, what it really means. And you say we're watching, and I want to bring up a quote again. Now, this is the end game of a decades-long monetary experiment. We just talked about it briefly, but what are the hard signals? Is it in data or is it in policy that kind of tell you we're nearing the edge? I mean, is it 2008 all over again or something much bigger?
Close to that. I mean, I think it'll be bigger. It's really mathematically driven, and the development really kind of, if you go way back, and the book talks about this. It started with the Fed, then it got worse in '71, but it was a slow boil until 2008, and that's really when the true monetary chaos started to break out, and they put interest rates at zero and printed a ton of money. And of course, so that was the first big print, and there was another big print in 2020 in the COVID example, and that they created 40% of the money supply in 2 years. And that's what's causing all the inflation and pain that people are feeling right now, which is very sad. And the reason I say it's coming to a head, Jeremy, is just that if you look at the debt to GDP, you look at the U.S. federal government budget deficit, you look at the debt they have to roll over this year, and they focused all on short-term debt because people aren't buying the 10-year, and they don't want to buy the 10-year because everyone recognizes the inflation risk. if you look at the math behind those things, what you see is that it's just unsustainable. And in spite of the good efforts of Doge, the government efficiency effort by Elon and Trump to cut expenses, it's going to be extremely hard to do because 80% of the expenses are in areas that are kind of considered untouchable. Basically, Social Security, Medicare, Medicaid, defense, and interest. And so, and if you cut the balance of the 20%, even if you took that to zero, the budget still wouldn't balance. So you've really kind of got a situation where the government just has to keep printing money and at an accelerated rate. I mean, one of the quotes in the book is that the problem with inflation is that it's like getting a drug high or a liquor high, and to get the next one, you got to take more.
Mhm.
So it's cumulative, and it appears to be coming to a head. And a couple of signals that it's coming to a head that you and I can both see, and it's very obvious to most people. Gold is just relentlessly pushing to record highs every day, week, and month. Here we are at 3,100. Last March, we were at 2,070. So that's a 50% move in a year, which is a really large move for gold. It has very rarely done that. And then, of course, Bitcoin also hit a record high of 106.7. It's backed off to 85. But the point is that these are canaries in a coal mine saying, hey, monetary debasement's a problem. We'd prefer to hold gold versus bonds.
Yeah. Yeah, well said. Critics, will comment to me and they're going to say, we've heard this before, yet the system keeps going. I mean, what makes this different? Is there a specific event that you're watching for?
Yeah, it's a fair question. And you're right. And I thought 2008 was the big one. And maybe this isn't the big one. But I will say, we'll get to the event in a minute. I will say that what I lean on to kind of we're getting close to the end game is that these events are getting closer together and the amounts are getting bigger. More and more people are becoming aware of it. And as more and more people abandon the bond market, the problem is going to be real. There's also a chart in the book that I think is very instructive, which is done by Hirschman Capital, that shows that countries, when they get to 130% debt to GDP, and the U.S. is at 125 right now, in almost all cases, in fact, in all cases in the book, it shows you that, soon thereafter, there's a monetary event, which involves either a collapse of the currency, a big deflationary event, or very high rates of inflation. So, we're kind of there in terms of the math, and that's kind of what I'm leaning on. In terms of the event, what I'm watching the price of gold, I'm watching the price of Bitcoin, I'm watching the stock market, and I'm watching the rate on the U.S. 10-year. And, I think that all of those will give us a clue. When the stock market turns down, if the 10-year doesn't catch a bid, look out, because, it implies that people aren't willing to take their stock cash and put it into bonds because they recognize that bonds are being debased. And, also if gold and Bitcoin keep pressing on to record highs, that's going to become self-reinforcing as more and more people say, hey, what's going on? And then they realize what's going on is the government's trapped and has to continually print more money. So Jeremy, basically countries fail. Countries have currency events and fail when everyone realizes the government can't stop printing. And I would argue that you realize that, and I would argue that I realize that, and a lot of people in gold and Bitcoin land realize that. But I would argue that the average citizen does not realize that yet, but they're going to.
And they seem to be buying gold too, Larry. Let's go back to that.
Costco sold out, right?
Yeah. Let's go back to that inequality question, because, a lot of our viewers have been talking about this divide between Main Street and Wall Street, feeling the prices at the counter. Is it just going to get worse from here? When do people start waking up to sound money?
Yeah, well, I think sadly, yes, inflation sadly is going to get worse. They have not licked the inflation genie, and that will probably be the event that causes them to wake up to sound money. I think that Wall Street will also suffer because Wall Street's extremely overvalued. The stock market's extremely overvalued. It appears to me we've got signs now that the stock market is going to back off and start to turn down. We're seeing signs of slowing in the economy. And of course, those things will make the government deficit worse, right? Unemployment will go up, transfer payments will go up, tax receipts will go down, and the deficit will get worse. And so, my sense is that what's going to happen is the government's going to have to come back into the bond market and buy bonds and take interest rates down. They could get that interest expense down substantially if they went back to a ZIRP policy. Now, don't get me wrong, that would be extremely inflationary. And they would be declaring victory on inflation before inflation's really been conquered. Even they admit that the target is 2 and we're running in closer to 3. So, but, if the economy turns down, the stock market turns down, the Fed's going to say, hey, you know what? inflation's good enough for government work. We're going to focus on the employment mandate. We're taking rates down really quickly. And
Yeah,
I think that's kind of in our future, you know.
let's talk a little bit about the stock market. I mean, it's been fascinating
Yeah,
to watch. And of course, you've been doing this a long time, my friend. I mean, you've been through various cycles. You've had the
yeah,
dot-com bubble, of course,
yeah.
housing market. Now you call in the book, quote, the everything bubble. So I got to ask, I mean, what makes this bubble a little bit different? And are we entering the final phase, or is there still time to kick the can here, Larry?
Well, that last question, I don't know, and I've been wrong plenty. So they could have a couple more kicks in the can, but we've got to be close to the final phase. And let me describe why I think it's the everything bubble. And it's just because, in my view, everything is mispriced in terms of, compared to sound money. And let me just elaborate on that. The reason that's occurred is that, in 2008, they took interest rates to 0% and they left them there until 15. So you had, basically 7 years of free money. And then they started slowly raising them in 15, 16, didn't get that far. And in 19, they pivoted and took them back down to zero again, and they stayed there till 22. So you've really had, kind of, I don't know, call it 11 years of free money. Free money meant that financial players, Wall Street players, private equity firms, hedge funds, et cetera, could borrow at almost nominal to zero cost and take that money. And what did they do with it? They bought assets that were going up, bonds and stocks, but particularly stocks, less so bonds because they were aware of the inflation risk, and real estate. And so bonds and real estate have become, in my opinion, mispriced, and they got those prices because of all that free money. If interest rates stay high, the housing market is quite moribund right now, and it's moribund because mortgage rates are high, and people bought houses they couldn't afford at higher rates. If they didn't, particularly in Canada, this, you guys can't get 30-year mortgages the way we can. So, a lot of Canadian mortgages are probably resetting right now to higher numbers than what they were taken out at. And
Mm-hmm.
of course, that dampens the housing market. So it was a monetary distortion, Jeremy, that, free money caused a lot of things to get quote unquote mispriced. And my sense is they will revert to the mean. I mean, there are charts in the book that John Hussman did great work on comparing this market to prior markets. This market is more overvalued than 1929 at the peak, and that
Mm-hmm.
market went down 82%. It's more overvalued than the dot-com bubble, and that market went down 50%, and the dot-coms went down 80%. So it's more overvalued than '08. That market
Right.
went down 47%. So, and to me, what this feels like is a bubble in AI stocks, I think. I mean, AI is important, it's real, it's going to change all of our lives, but very much the way the internet was important and real and got overvalued, and then the bubble burst. And of course, the internet came back and did a lot of great, grew afterwards. If you're in the right names, it was a great place to be. But I think we're kind of looking at the same thing happening in AI. There's just
Yeah.
been way
Yeah.
too much money chasing it, and it's going to burst, and we're going to get a severe correction, and then AI will emerge as an important thing. But yeah, so that's kind of how I see it. That's why I call it the everything bubble. All the free money led to the everything bubble.
Hmm. Well, we're starting to see a little bit of those earnings cracks as we speak. But, we got to go back. I mean, you're talking about printing money. We got to talk about the Fed. You write about the Federal Reserve with no punches pulled, Larry. One of the lines that stuck with me was, quote, 12 humans have an immense influence over our financial markets. Now, you argue that this form of central planning, not capitalism, reminiscent of Soviet Union, basically. I mean, can you explain
Right.
what you mean by that and how we've allowed this to happen in a supposed free market economy?
Yeah, it's kind of amazing. I mean, the Keynesians have brainwashed all of us, and the guys in the Fed. They paid a lot of money to have academics say that we absolutely need the Fed. But if you really think about it objectively, all prices should be set in the free market. I mean, the price of any goods or services is a balance of supply and demand, and money, the borrowing money, the price is the interest rate, and that should be set by the supply of savings balanced against the demand for investment. So the market should set that rate. But of course, these apparatchiks who call themselves Fed governors, they've set that rate, and that's a very powerful position they put themselves in. They make a lot of money for doing it, and they can really shower benefits upon their friends and then get paid a lot of money once they come out of office. We just saw Janet Yellen just went to work for PIMCO after she got $7 million in speaking fees. So, what they've done is they've created a system that benefits them, not the rest of us. And whether they've done it evilly or intentionally or not, it really doesn't matter. I mean, here's my point. Even if they were omniscient, even if they were godlike, they couldn't find the right interest rate because
Mm-hmm.
central planning of a price just doesn't work. The Soviets proved that with the grain shortages they had when they tried to set the price of grain. So, it's a system that it's funny that we've relied on it. We've relied on it out of history. At one time it was much more constrained. I mean, it wasn't until really '08 and Bernanke just brought in a whole new level of kind of absurd behavior. And, the notion of taking interest rates to zero, or, and that obviously benefits people who can borrow and cantillionaires, or the other extreme, Volcker took them to 20%, which almost bankrupted my father. So, it's like we've got these guys setting these monetary policies, and they don't suffer from the outcome of those policies, but the rest of us do. They take rates to 20 and a lot of people get hurt. They take them down to zero and a lot of the wrong people benefit, and the rest of us suffer from inflation. So, yeah, it just doesn't make any sense to have 12 people setting the price of money. The market should set the price of money. And again, I wrote the book, Jeremy, because I felt like, I watched political debates. I just felt like nobody was really talking about the core reason. And I needed to explain it in terms that an average person would understand. I didn't want to get all in the weeds of Fed and monetary policy. In fact, I showed it to some people who didn't know anything about this. And first one read it and said, "What's the Fed?" I said, "All right, I need a footnote that explains the Federal Reserve. I need a paragraph that tells what the Fed does, because, the Federal Reserve has really made our lives much more difficult than they need to be. It's caused a lot of pain. And so, if we address that and we go to a sound money standard, we won't need a Federal Reserve." So.
Yeah, well, I guess, is that the alternative model? I mean, because supporters of the Fed are going to say it's prevented collapses and kept employment stable, but what would it take to avoid the volatility?
Well, so that's what they're going to say, but in fact, I think it's made collapses worse. And they're both the arsonist and the firefighter. I mean, look, business cycles will always exist to some extent because of animal spirits, but they can be completely addressed by just not having a too big to fail law. I mean, bad businesses that do stupid things should fail, period, and we should let them fail. And the way that the crony capitalist system has been set up is that all of these people have figured out that if they're in these businesses, call them banks or whatever they want to be, insurance companies like AIG, they figured out a way to become so big that effectively, their failure threatens the operating of the entire system. And therefore, they got the government to bail them out. So they've got a partnership with the government. The government likes this because they get all their wars and everything else they want to do financed. And they like it, the people who are running the banks and the insurance companies and all, they like it because they've got heads you win, tails we all lose. I mean, they can lever up like crazy and try and make money, and they keep it if they're right. And if they're wrong, they get bailed out. I mean, in '08, they got bailed out and they got $20 billion of bonuses the next year, which was just outrageous. I mean, people were losing their homes, jobs, everything. It was terrible. And yet the people who did it didn't pay a penny for it. No one went to jail. So, as in the S&L crisis, at least we prosecuted some of the guys who did the bad stuff. So yeah, that's the issue, really.
We got to talk a little bit about inflation. I mean, you pointed out that CPI is a distorted measure, and you quote John Williams from Shadow Stats. I mean, we've been talking about revisions here at Kitco News all last year. I mean, it seemed like before Trump came in, we had these revisions coming out. Why is the government lying to the public about inflation, and what's the real rate in your view?
That's both great questions. I think the government lies for the obvious reason that it makes their balance sheet and income statement look better. A lot of their benefits adjust based on CPI. Social Security benefits go up by CPI, so they have a very strong incentive to lie and cook the books, and the book describes that and all the great work done by John Williams. So that's all there, and that's all true. What was the second part of your question?
What's the real rate? I mean, critics might. I mean, it's so cherry picked. It feels like.
Yeah. So it all depends. I mean, truly, Friedman was right. Inflation is always a monetary phenomenon, and they've been growing. If you look at long-term averages, they've been growing M2 at 7 or 8% a year. So I think that's kind of the long-term average, but it goes up and down around that. And that's just one way of looking at it. But I mean, look, they say they're getting back to 2%, but the reason they're going to have a hard time getting there is that this 40% burst in the money supply created a lot of dissatisfied workers. Let me just give you an example. In the United States last fall, the U.S. longshoremen went on strike. These are the people who load and unload ships. And they went out and they got a deal. They got a 6-year, 60% increase in pay. So their pay is going to go up 10% a year for the next 6 years, guaranteed. Okay. That's a long way from 2%. Okay. And so So the whole notion that the Fed has inflation under control, I don't think they do, because labor got very badly hurt with the last bout of inflation, and they're going to push very hard to get their fair share back.
Hmm.
And that's happening everywhere. So, the 70s showed us that once inflation starts, it's very, very hard to get it back in control. I mean, Volcker did, because he took rates to 20%, but in turn, he nearly croaked the economy, nearly bankrupted my father, and created a lot of pain in that process. And he was able to do that because at the time the debt to GDP was 30%, not 125%. I mean,
Hmm.
if we took rates up to 10, 15, 20%, the entire world would go bankrupt. And nobody wants that. So,
Yeah.
look, the whole thing's a terrible mess, but there's a beauty, and I don't like focusing on the mess because it's depressing. But there's on the other side of this, it gets a lot better, and that's what I'm excited about. In fact, I just did a pod earlier today with a guy who lived through the hyperinflation in Argentina in 1990 and 91. And
Hmm.
he said, it's horrible. I mean, my mother would go out and buy food the minute she got paid because she knew it'd be more expensive. And she said, and then the currency failed totally, and we backed the currency with a sound measure. In that case, they did the dollar, and the dollar was sound in 1990. And he said it was amazing. Within a year, everything got so much better. There was no inflation. Everyone was working. And, it all kind of worked. And that's the bright side of this problem we're suffering through here. If we can do a monetary reset to a sound money standard, whether it be gold or Bitcoin or some combination, the world will get a lot better. And so
Hmm.
that's another reason I wrote the book. It's like, okay, look, folks, this is the problem. The solution is we got to go back to sound money. Start thinking about that when the next time you go to the voting booth. I mean, we're going to eventually, inflation will continue to be a problem. We're going to have politicians who are going to say, hey, this inflation is a real problem, and we need to return to sound money. Those are the
Yeah.
people we need to support, right?
Okay, well, this is good. This brings us a good little transition, because one of the most memorable quotes in your book is this one for me. When someone with the ability to click a mouse key can create money, that's inherently unfair. I mean, that brings us to fiat money. We've been just talking about it, but can you break it down for the audience again, Larry? I mean, what is fiat? How does it steal from the working people?
Yeah, so fiat is money. I mean, money is the thing that we all agree to store value in and to transact in. And there's three forms of money. Gold is geologically based money. Fiat is money controlled by the governments and the central banks. They control the supply of it. And then Bitcoin is algorithmically, mathematically controlled money.
Hmm.
And so the fiat money that the governments print, they can print as much as they want, and their solution to all problems is to print more money. And so, basically, we're kind of continually having our beer diluted by water, and so it's just not as strong because the money
Yeah.
gets watered down every year.
Yeah.
And it's unfair to the working person because, that printing generally benefits somebody who's a debtor. It makes their debt easier to pay off, but the working person doesn't have much debt capacity. And so the higher prices, without their wages necessarily going up, they pay higher prices. So they're just continually getting squeezed.
Hmm.
And the people
Yeah.
who are at the top of the system, they know how to play that system in their favor. And that's why we have so many, extremely rich people in the private equity and the LBO world and the financial world, the hedge fund world, et cetera. All these people have gamed the system in their favor and worked to make the system more unfair. And the book goes through a large history of that, as you'll recall, just
Hmm.
the way they changed the rules on derivatives. And there's just so many, there's example after example of it. And, I felt like it was important for somebody to tell that story so that, a common person who sits around and says, gosh, why is my life so hard? Why are my groceries so expensive? And maybe hears from a politician, it's greedy corporations. They actually are armed with some facts and can fight back and say, no, that's not really the problem. It's the government and the Federal Reserve that are printing all this money. That's really the problem. We got
Ah.
to stop that. We got to go back to sound money.
Yeah, I'm hopeful people are starting to wake up to it. You're right that, I mean, it's because of this book, Larry, and a couple of other things here, but you're right that we're in the middle of a fourth turning, a once in a generation upheaval. And at this time, the core question is, what is money? I mean, first, can you explain the fourth turning theory that you're referring to
Sure.
here to the audience?
I'll try and do it briefly. There's a book called The Fourth Turning by Howe and Strauss, which I highly recommend everybody read. They're social scientists or social engineers. What they discovered, or they've documented, is that there are societal trends that kind of come in four different sections of 20 years each, which is kind of the maturity lifespan when somebody's in their mature age from 20 to 40. And every, what happens is societies go through cycles of birth, growth, maturity, and decline or rebirth. And we're in a rebirth cycle. The system we have has reached its natural end span. And that's part of why I believe, you asked earlier, why is this happening now? Well, it fits the fourth turning model very nicely. And in that fourth turning period, what happens is the rules change and the society looks different. A problem arises, the problem gets addressed, the rules change, and then going forward, the rules are different. And so, let's go back and look at some prior ones. We're in one right now. They tend to be about 80 years apart, 4 20-year cycles. The prior one to this was the World War II, Depression World War II. So the world was a certain way before that war. It was different after that war. The one before that, roughly 80 years earlier than that, was the Civil War. The U.S. was a certain way before that and then different after. The one before that was the American Revolution, where before that we were part of the crown. After that, we became an independent nation. So in each of these turnings, there's usually turmoil, change, some difficulty, but the problem gets resolved, and then things get very good again in the first turning, which is kind of the new birth of a new system. And I envision that this will happen in the next 5 to 10 years. We will create a new system, and that system will have sound money at its core, and life's going to be great. And things are going to get a whole lot better. These problems we're dealing with are not going to be present.
That's what I was going to ask you. I mean, what might that look like? And could Bitcoin be a part of it? I mean, there's a lot of talk about that right now.
I believe Bitcoin will be a part of it. I believe gold could be a part of it. They're both forms of sound money. One's analog, one's digital. What it's going to look like, it'll be different. There won't be as much debt. I think the politics will get less corrupted. I think we'll have fewer wars. I mean, one of the things this fiat currency has done, the book lays this out clearly, is it's enabled governments to spend on wars. Wars are extremely expensive, and nobody really wants to pay for them. And most people really don't want to engage in them. I mean, I don't know a lot of people want to run around the world and kill other people. I mean, if you do, you're a psychopath. So, if you had sound money, a government couldn't conduct a war by printing money to pay for it. And so arguably, you could think that, it's possible to think that maybe there won't be as many wars on a go-forward basis with sound money because the printer's not around. I mean, that's certainly what many people have said, and I kind of agree with it.
You've been outspoken about the debt crisis, too. I mean, we talked about it a little bit here. We're over 120% debt to GDP. And I mean, as you mentioned, you cite Stein's law. If something cannot go on forever, it will end. What does a debt doom loop look like in practice here? I mean, what should we be watching for?
Let me kind of describe that just so people kind of grasp it. I'm sure most of your listeners know this, but so the government is obviously spends, the problems starts to arise when the government tries to make more people happy than it can afford to make happy by, transfer payments and everything else. And so they run a deficit. They spend more than they're taking in tax revenues. And of course, they need to finance that. So they do so by selling bonds into the bond market, which back when the government was better managed, the U.S. Treasury bond was the bedrock of stability in the world. Everyone could buy it knowing it wouldn't be debased and it was safe and it would be paid back and you would get interest rate on it. But what's happened is, we've gone from a small amount of debt, and the book shows this. I mean, the last 5-6 years, we've grown the debt $11 trillion in 5 or 6 years. It's more than it took the entire first 80 years to do. So, that debt growth leads to a problem where the interest costs start to get very large. And now you've got a deficit that's occurring because of those interest costs. And so, our deficit last year was $1.8 trillion. Well, 1.3 trillion of that, or 1.1 trillion of that, was interest charges. And so, if interest rates go up, then interest charges get larger. If interest charges get larger, the deficit gets bigger. If the deficit gets bigger, you need to sell more bonds to cover the deficit. So now you're selling those bonds into the same size bond market. Well, the buyer of the bond says, I'm not going to buy those unless you pay me a higher interest rate. Okay, so you sell them, but they pay a higher interest rate. Well, now the government, interest expense is higher. Oh, and now the deficit's higher. Oh, and now we have to sell more bonds. You see where I'm going with this? We're getting a reflexive circle, kind of a doom loop of, the more interest rates go up, the more bonds you have to sell, the more bonds you have to sell, the more it pushes interest rates up, the larger the deficit, et cetera, et cetera. And this is how currencies and countries fail. This is a sovereign debt crisis. This has happened before. It's happened in Argentina. There's a whole list of them in the book. And it's happened in many, many places. Now, it hasn't happened in the United States, because generally speaking, pre 2008, we were pretty well managed. But it's now in the process of happening in the United States. We're doing all the things that all of these countries who had currency problems have done in the past. And yet, the large mass of the people are sitting there saying, well, that could never happen in America. America's been stable for 200 years. And they're right. They're right. But if you do the same things that caused a problem in all these other countries, maybe it takes longer because America is the biggest country and leading economy. But guess what? Eventually, it catches up with you.
Yeah.
And so I think we're kind of at the eventually state. But as you point out, they might be able to kick the can for another 5 or 10 years. I don't know. Feels like we're getting pretty close to the end point to me.
I hear you on that. I mean, the U.S. has been running deficits for decades. A lot of people are asking why we can't just grow our way out like we did after World War II here.
Yeah, that's a great one. And that we did. First of all, they did that with yield curve control. They held the interest rates down because that would have blown out the deficit. And secondly, we had a much better demographic picture in that case. We had more young people. We had the GIs coming back from the war. We had the automobile industry was nascent. We were building the interstate highway system. And basically, housing and autos grew the economy massively between 1946 and 1960. And that's what basically brought debt to GDP back to a reasonable level. Now, if you want to take the bullish side in America, maybe AI and some of the things we're talking about doing, could help with productivity and so forth. And we could grow our way out of it. It's entirely possible. But I think even with that growth, it would probably have to be inflationary growth because the debt to GDP balance is just far too large. The other problem I'll mention, Jeremy, that's kind of an interesting point, is that we're trying to. The world is and I talked about this in the book. The world is a naturally deflationary place. Look at technology. Look at how much cheaper everything gets every year in technology. So we've got an economic system that benefits from and is driven by technology and deflation, and yet we've got a monetary system that almost has to, like a shark, it has to move to breathe. So we have to increase debt to keep it going, or else the existing debt collapses. These two things are in conflict with one another. Having a deflationary economic system in terms of we're building more for less all the time, but having a monetary system that must take on more debt and grow the top line all the time, something's going to give. And that's what I think. I think we're at that point.
Yeah, well said. Larry, we're going to flip over here, talk a little bit about Bitcoin, because in the book, you say, quote, Bitcoin is the single most asymmetric bet I have ever encountered. Now, that's a major statement from someone who built their reputation as a gold advocate. Yeah, I mean, you argue that Bitcoin is not just a hedge of inflation, but a peaceful monetary revolution, and even say it could end wars like you did just before. So I want to talk about it. I mean, I guess the question is, why do you believe in Bitcoin and not gold as better weapon against fiat debasement today? I mean, walk us through the mechanics of this.
Sure. Look, they're both good. I mean, the way they're both sound money. They're both money outside of the state. The state can't print gold. The state can't print Bitcoin. So they both have a lot of things going for them. Gold is analog. Bitcoin is digital. We're moving toward a digital world. And, the bottom line is that when Bitcoin came along, what they invented when they solved the mathematical problem that allowed, that stopped double spending and allowed a fixed number of something digital to be controlled and audited every 10 minutes. When that came along, it changed the game. I mean, even gold, as sound as it is and as good as it is, we increase the supply by 1.7% every year and above ground. And in 45, 50 years, we'll have twice as much gold on the planet. So, Bitcoin, there will only ever be 21 million. So it's a natural deflationary money. I believe that it has the potential to be the base layer of money because it's easier to verify. It's easier to move. I mean, moving gold around is hard. Verifying gold is not simple. There have been counterfeit gold bars, etc. And, basically, it's not transparent the way that the Bitcoin ledger is transparent. So that's the biggest difference, I think, between the two. The other thing that's going on that I think is going to drive the value of Bitcoin so much higher, everyone who wants to own gold, I mean, gold's been around for 5,000 years. Everybody knows what it is. Everyone knows it's money. It's the base layer of money. But, because of that, it's very widely distributed. It's not like it's some great secret. Yeah. Bitcoin is an emerging challenger to gold. I call it digital gold. I think it really does have the properties of gold, but it has some other properties as well. The transferability and the way you can see it on the ledger. It allows, Bitcoin is undergoing an adoption curve And as you and I both know, that not everybody in the world owns Bitcoin today. In fact, a small fraction of the world owns Bitcoin today, but I believe that fraction will grow as more and more people come to appreciate its monetary properties. And so, in my opinion, Bitcoin will someday perhaps be the base layer of the monetary system. And it's interesting. I'm not the only one who said this. I don't know if you saw it. It was on the Twitter yesterday. Larry Fink at BlackRock, they just wrote their annual report, and they said that Bitcoin is actually a challenge to the reserve status of the U.S. dollar. And I thought, BlackRock's one of the largest asset managers in the world, and here they are actually saying what I believe. I thought, boy, that's interesting. And so, I think it's important. I really highly suggest people who are skeptical of Bitcoin that they read my book and try and understand the argument that I put behind it. I do believe it's the most asymmetric thing I've ever seen. And more importantly, I think that, a lot of the reasons it's been demonized have to do with kind of the crypto, Sam Bankman-Fried, arm waving, promoter, rug pullers in the whole crypto space. I mean, look, gold people are very sound based people who tend to be quite conservative, and they don't fall for bullshit. And so, the average gold person, I think, and I count among, I have many average gold friends. When they look at Bitcoin, I know the reaction is, oh, that's all just arm waving and bullshit. And I say, well, it's a little more complicated than that, or it's a little subtler than that. All the crypto stuff, you're correct. You're dead ass right. It's rug pulls, arm waving, bullshit, fraud, Sam Bankman-Fried. But when the guys who invented Bitcoin, whether it's one guy or a bunch of guys, we don't know. But when Bitcoin got invented, what they did was they created absolute digital scarcity. And you might say, well, why does that matter? Well, it actually does, because it's provable, verifiable, provable, auditable, visible digital scarcity. So for the first time, really in the history of mankind, we actually have a form of money that will not be diluted. We've never had this before, ever. I mean, even gold gets diluted. So that's different. And I think it means that one has to think about, what does that mean? I mean, it'd be like asking a caveman, what does an airplane mean? I mean, he doesn't even necessarily know how to conceive of what flight is, and the notion that we're going to have a Concorde going across the country, across the ocean in 3 hours, that's way beyond his imagination. And so, I'm not even sure any of us really know exactly what Bitcoin means, but what it does provide is a ledger that is completely truthful, honest, and mathematically based that anyone can see. And I think the implications are going to be really big for money and for other things too. So, I really highly encourage people to throw off their skepticism, or throw off their, the taint that crypto in general and the crypto bros have brought to this whole area, and read some of the Bitcoin maxis, read my book, read Lynn Alden's book, read Saifedean Amos's book, and try and understand why this is actually a technology and an invention that, to me, it's like I was a big investor in the internet, and it really reminds me of the internet. I mean, and it's a parallel. I mean, it's actually the monetary version of the internet, right? So, the adoption, all of it, the skepticism. People were very skeptical of the internet in the beginning. You remember Krugman saying it's no better than a fax machine. People don't have anything to say to each other. Who needs the internet? That's what he said.
I mean, I've heard you debate. I've heard you debate on stage about this. We were talking about it with Peter Schiff down in New Orleans when I saw you. I mean, some people would argue, Bitcoin has dropped 50, 60, 70 in past cycles. So for those who see volatility as a liability, why should they trust it as a store of value in a crisis?
It's a totally great question. What they've got to understand is that it's very early days and it's emerging. And so on very good days, it's going to the moon and we can't stop it. And on very bad days, Bitcoin is dead. And, Amazon is up 218,000% since the day it went IPO, and yet it went down 50% on a regular basis. After 2008, it went down 90%. And so when you've got something new, untested, emerging, unproven, you have emotions run high in both directions. We got to have it. Let's push the price way up. Oh my God, it's not working. There's a risk to it. Let's throw it the hell out. And so, so yes, it's highly volatile. And for a lot of my clients who don't like that volatility, I say, fine, stick with gold. You'll be fine. You'll be protected. But what I try to suggest to all people who I speak to is the way one, as an investor, the way one deals with volatility, especially if it has a strong upward skew. And you're right, it's drawn down 50%, 70%, 80%. But guess what? It then comes back and goes on to make a new higher high. And in each drawdown, the low that it hits on that drawdown is above the prior low. So it's trending up with a lot of volatility. And in my opinion, the way an investor deals with that is your allocation size. So, would you want to put 100% of your money in Bitcoin? Of course not. That'd be crazy at any age, right? But, if it's got a positive skew over a bunch of years and you believe in the concept, can you take 4% of your net worth and put it into an asset that'll go down 50%? Sure, because you're not likely to sell it when it's down 50. You'll just hang on to it, knowing that it'll eventually go higher. And so that's really, in my view, the way that investors should deal with the volatility is their allocation size. They should put into it what they're comfortable having in an asset that they know can go up a lot more than gold, but they also recognize can draw down 50%, because gold has never drawn down 50% in a year or in a cycle. A big drawdown for gold is 20%, and that only occurred right after the 1980 bubble. So in general, gold is up. 65% of the time, gold is up up on the year, and then the other 1/3 when it's down, it's not down very much. So
we need to talk about gold. I mean, it's clear that there's a historical movement happening in the space. We talked about it just before.
Right?
I mean, it's crazy. I mean, the precious metal just had one of its best quarterly performances since the 1980s. It's currently trading at a new record high above $31.50 an ounce. And we're seeing central banks consciously choose to step up their gold purchases as they increase the share of the precious metals in their reserves. Talk to me about what's happening in the gold market. I need your thoughts on this. I mean, you're one of the few ones that aren't comparing Bitcoin and gold here.
Yeah, you see it and I see it. I mean, we know there's been a lot of physical move from London to the U.S. I'm not sure what that's all about. Recently, just this morning, there was announced a huge purchase of futures that look like they intend to take delivery on them. I mean, there appears to be a little bit of a scramble for gold. I mean, it appears like we're entering a gold bull market. And, it's quote unquote on. Now, that doesn't mean we won't have drawbacks. Of course we will. But, I think that what gold is very good at doing is sniffing out future monetary debasement. I mean, it did it in 2018. It started moving before COVID. And then COVID came along and it really moved. And so I think what gold knows is that the monetary system is broken and that governments will sooner or later be forced into printing money. And it's just front running that move. I think these big buys, by the way, they could be governmentally driven, but I actually tend to think that if you look at it, Jeremy, there's about $950 billion in quote unquote wealth worldwide if you add real estate in there. So call 450 of that, bond, stocks, cash, art, all that kind of stuff. The other 450 is real estate. A lot of that wealth, I think, is kind of thinking, they're printing a lot of money. There seems to be inflation that might continue. Monetary debasement's a serious risk. Maybe I should own some gold. And the gold market, by comparison, is tiny. The total market cap is about 20 trillion, but really only about 10 of that's available, because the other 10 is either in a central bank or on a lady's neck or in a museum. So it's actually less than 10. It's more like 6 or 7 is available for purchase. So 950 trillion in assets, a sound money market for gold of 6 or 7 trillion. Well, even if only 5% of the 900 says, gosh, I want to protect myself, that's 45 trillion dollars. And, that's chasing a $7 trillion market. So what's that going to do? That's going to push that gold price up, right?
Yeah. And a lot of people are buying, as you mentioned. I mean, the inflows right now are just crazy. I got to talk to you. It's interesting because I got close to the end of the book here, and you close the book with a bold vision: abolishing the Fed, ending federal deposit insurance corporation guarantees, and letting the free market determine money. Some people would say that this is radical, but explain a little bit. I mean, why do you think that this is the only path forward, and what gives you the hope that we can actually get there?
Well, I mean, the hope that we can get there, I'm absolutely convinced we'll get there, because I think human beings trend toward the best thing for wider societies. The time frame, well, that's a little bit more debatable. Can we get there quickly? I don't know. Look, it does sound radical to people who've been steeped in the Keynesian lore of we need all these great wizards to tell us how to run our economy, but we really don't. I mean, if banks get overextended, they should fail. I mean, we should go back to the early 1800s, and earlier 1900s before the Fed, and the model we had, which was just capitalism. And there'll be banks that'll be very well managed and well run, and they'll have a lot of trust, and they won't need FDIC insurance. And if you want to run a risky bank and pay a higher rate of interest, fine, you're welcome to do it. But if you make a mistake, you're going to go bankrupt, and your depositors are going to suffer a loss. I mean, to have the government try to kind of quote unquote socialize the losses for all of us, it unfairly incentivizes people to do stupid shit. And then we all pay for it. That's the problem. And so all I'm really advocating is rule of law and fairness across all of these different domains so that nobody has a particular advantage. And, if you do something extremely well, you'll be rewarded. And if you don't, you get over leveraged, you get out over your skis. I mean, by the way, this would eliminate so much of the kind of gambling and just the nonsense that, everybody in the fiat world, when your money is melting like ours is, what tends to happen is you tend to behave in a way, you play the lottery, you feel like you have to do crazy, aggressive, risky stuff to stay ahead of the debasement. Do you know what I mean?
Yeah.
Whereas in a sound money system, who gets rewarded are the people who actually are conservative and save money. And that's how it should be, because it's that saving money that provides the capital to improve the productivity, to make the system more efficient, to make us all have a higher living standard. And that's really the goal, isn't it? The goal is to have everybody's living standard improve. The goal is to have everybody live better than they have their kids have a better life than they had, because productivity and technological gains have improved the world. And that we can attain that goal, but it's going to be very hard to attain that goal on fiat money.
Yeah, I was going to ask. Are you optimistic that we'll see the meaningful change? Because what's your message? What's your message to an average saver here? What should they do now to prepare for what you call the big print?
Yeah. So, I'll address the first question first. Am I optimistic? Yes, we're going to see that change. Time frame, I don't know. I'm pretty sure within 20 years. And I think the reason it'll happen that quickly is I think the pain, government tends to respond to pain. I think the pain is going to get large enough, sadly, that we're going to force it. We're going to force reform, and then things will get better. In terms of what the average person can do, the book is very clear about that. You want to own things. The government is in a debt trap. We are in a sovereign debt crisis, and historically, like 8 out of 10 times, there have been a few that have led to depressions and outright collapse, but 8 out of 10 times, and certainly in the system we're in now, the odds strongly favor that they're going to print money to address the issue. And the printing of money is going to be inflationary. So the first thing you want to do as a saver is you want to save in terms that the government can't print. The government can't print gold. The government can't print Bitcoin. The government can't print houses. Okay, I think houses are a little further down the line, because one of the things they can do is they can tax them. And of course, all governments are running deficits, so they're all getting greedy, so taxes are going to go up. So while real estate's an okay investment and better than fiat, I think it's still subpar compared to gold and Bitcoin, which are harder to tax. So I think people just need to understand that I said in the book, it's not investment advice, but I think people who don't have, I know a lot of people, let me give it a different way. I know a lot of people who have been very successful, made a lot of money, have all that money in the stock market. And they're not really thinking, or the bond market, and they're not really thinking about the monetary debasement issue. And I think that, in 10 years, they're going to, if they don't get some of these sound money, proxies, gold and Bitcoin, they're going to have regret, because I think these things are going to outperform stocks by quite a bit in the next 10 years.
Yeah, you continue to, the Bitcoin topic comes up, and before I let you go here, Larry, we got to talk about Larry Fink, because of course we got the best producers, and I now have the quote. The CEO of BlackRock wrote, quote, "The U.S. has benefited from the dollar serving as the world's reserve currency for decades," but he added, "It's not guaranteed to last forever. If America doesn't get its fiscal house in order, if deficits continue to balloon and the U.S. could lose that privileged position to digital assets like Bitcoin." Now, we know this warning comes during a time of heightened market uncertainty, and we also have this anxiety over the country's economic trajectory, especially as new policies under President Trump take place. I wanted to get your thoughts, though. How can we see this relationship between Bitcoin and the dollar continue to develop, and we'll see the dollar's reserve status deteriorate?
Well, look, they could do it very aggressively. They could sell all the gold and buy Bitcoin and announce that they're going to put Bitcoin on the balance sheet, and the dollar would plummet. And they're not going to do that for just that reason. The dollar is going to plummet. If they're more intelligent about it, what I hope they will do is they will lean in the direction of putting Bitcoin on the balance sheet, and the dollar will continue to diminish in importance, certainly in terms of savings terms. And then ultimately, the dollar will fade away, and these other sound money currencies will become more important and more relevant. But the Fink quote is interesting, isn't it? Here's a guy who was truly a fiat master, who as recently as 3 or 4 years ago hated Bitcoin, and but is a smart man in the sense that he looked at it, he did the work that I've done, you've done, others have done, he analyzed it, and he came to the conclusion that this is going to work. And gee, given that it's going to work, I've got to decide: do I want to be on side this thing, or do I not want to be? Yeah. And so he kind of got on side, and he opened up the largest ETF, and he's generally speaking a supporter. And don't get me wrong, I mean, the two can coexist for a while, and I hope they do. I mean, in the sense that I'd like to see the transition be fair and as painless as possible. Mm-hmm. And so, there are those who hope for and argue that we'll be able to have, a nice, smooth transition from this fiat system to a sound money system. I hope for that. I'd like to see that happen. But I have to say, having studied history, I'd say the odds of that aren't as high as the odds of a more chaotic solution where, they kind of lose control of the bond market, and then they have to print a lot of money, and then inflation really picks up, and then the political cries are even louder, and so on and so forth, until we eventually, as I said in the beginning of the conversation, get to the stage where we've got politicians who say, hey, the fact that the money is broken is a real problem. We've got to return to a sound money standard. And that's all it takes. I mean, don't get me wrong, it'd be a tough one-time adjustment. I mean, in the process, there'd be some pain. But my view has always been it's better to rip the Band-Aid off and just solve the problem and get on with the healing. Yeah. So, that's to my way of seeing it, that's what they should do. But, if you look at it today, are they ready to do that today? No, I don't think so. I don't think enough people are aware of the issue yet. Mm-hmm. and again, therefore the book, right? Try to make people aware of the issue. So,
all right. Larry, thank you for your honesty, your insights, and your passion, my friend. I mean, the big print is it's a wake-up call, and it's clear that the time is running out. I just want to say to our audience, if you ever wondered why the system feels broken, this book lays out exactly how we got there and what may come next. Now, the big print is available on Amazon, and as a special thank you, Larry himself has donated a limited number of signed hard copies to Kitco News. Thanks for that, my friend. We're giving them away as well, so you can head to our X profile at Kitco News now for details on how to enter. I appreciate your time, Larry. Thanks for this.
Oh, thank you. Great questions. I always enjoy talking to you guys. I'm a huge Kitco supporter. So if there's anything I can do, you want to do it again, I'm happy to do it. And I would just, please read the book. Please pass it on to your friends. We've got to get the world educated for why sound money matters.
Yeah, absolutely. Well said. And it helps if it's got a signature on it too. Thanks, Larry. Appreciate it.
Thank you very much. Good to see you.
Thank you. I'm Jeremy Szafron for all of us here at Kitco News. Thank you for watching. We're going to have some great content coming up all week long on this topic on sound money. So stay tuned. We'll see you next time.